The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour, where there's no bear side or bull side, just the right side. And of course, that's the bear side today. We're off 8 points in the S&P cash. We got down to 2154 and some change. Volume a little lighter, although it did start off very strong early in the day. 1.833 billion shares on the consolidated tape. We'll see how this comes out. Of course, Friday was the end of quarter. It was the last opportunity for the jackals and skunks of Wall Street to mark up and paint the tape.
Let's put some lipstick on this pig.
Putting some lipstick on that pig, because guess what? That's how they get paid. Or at least that's their bonus for this Christmas. So they wanted to make sure it looked as good as possible. And of course, to keep everybody in the boat, you got to make sure those statements look as good as possible that go out each quarter to the trading unwashed masses. But what else can you say about today? Well, certainly they threw everything in the kitchen sink at the market on Friday. A good indication, though, is the last few minutes of quarterly market closes. You'll tend to see pretty much what I was looking for on Friday, and that is you'll see a sell-off in the last couple of minutes, anywhere from 5 to 10 points. A lot of people know that at least on the short term, the markets are way overbought. Everybody's thrown everything that they can into it to get the price up of stocks. So there's always a few smarter hedge funds that will throw a lot of short sales right in at the close of Friday and tend to cover them today. But it's a pretty good bet that you're going to have a down day on the day following a quarterly pop like we saw on Friday. We'll keep a look at the volume on this, but you know, it's kind of hard to see, at least the data that I looked at and continue to look at, where this market can only go higher if there are some shorts to squeeze. And many shorts are unwilling to take a chance at these highs. We got a few stocks that are rolling a little higher today, rather dubiously. We'll talk about that. We'll talk about some statistics today. I wrote a little bit about it by just peeking out of the corner of my eye. I didn't have the volume on. I saw someone out pumping some rather dubious statistics in the market. So we'll talk about what you actually need to know and why some of the stuff you see is somewhat just wrong. Sometimes it's anecdotal. Other times it's just worse than hokum. And we'll talk about why. But as always, we like to come to you at this time.
The following takes place between 2 p.m. and 3 p.m.
And what else do we have going on out here today? Well, you know, it's going to be kind of quiet for a little while everybody figures out. I don't think there's that much upside, as we said on the show on Friday. I just didn't see that much upside in the market in the coming weeks. I certainly saw that the market doesn't have to go lower. And that set up my trading ideas. I also said that I thought that Friday was Christmas, i.e. you weren't going to get a better opportunity to pull the trigger if you wanted to buy some puts in the market or anything else. Not enough to say that that would be the winning trade in the medium term or even the long term. But this is about the fifth time that they've tried to push this market higher. The market did not react to Janet Yellen comment that she tried to put out late on Friday that said that the Fed would actually get active in buying stocks. No one took her either seriously or thought that it would ever make it through Congress. My understanding is that it is illegal for the Fed to actually go out and buy stocks like they've been manipulating them in China for so long. But we shall see what comes of it. And, of course, we always have to start off the show with a little history, because if you don't know your history, you are damned to repeat it.
That it's all just a little bit of history repeating.
Less than 20 years after the federal income tax was declared unconstitutional by the Supreme Court, it comes back like a bad rash from the dead of the Underwood-Simmons bill, later known as the Income Tax and Raping Bill of 1913. It's enshrined in law by President Woodrow Wilson, who signs it after 9 p.m. at night in the dead of night, prevent anyone from hiding assets during that day's business hours. The tax kicks in at 1% of all earned income, over $2,500 for single taxpayers, and $333.35 for couples. And long becomes the ability for politicians to screw over its elected recipients. What else can you say? This day that will live in infamy in 1913. What else is going on out here? Tesla is up almost about 5%. Tesla, in fact, a lot of people are talking about it. Doesn't matter because, again, it's constantly 25% of the float is short. So it doesn't really matter whether you're right or wrong on this one. Eventually, it will be right. But they're saying, well, we ship so many more cars. We ship so many more cars. Well, the dirty little truth in everything that's going on in Tesla is that they had to discount those cars to get them out the door. They've been pushing it real hard. And, of course, many people bringing it up. Somebody caught one of the a leaked letter to the retail things saying, this week, make sure and don't talk anything about discounts. So everybody already knows that why they were able to push a few more cars. They had to do it at the expense of dropping their margins. And again, remember, this is a company that loses anywhere close to $1 billion a year right now, maybe even a little bit more. We'll have to come back to the market and get more cash. The question is, when does that happen? And do they push out more shares? Do they try to borrow more money? A very interesting balancing act for Mr. Musk because, of course, he's already lost one of his companies for the most part for Solar City, which we knew was kind of a pyramid scheme to begin with, or at least I thought it was. And the question is, will it infect Tesla and then, quote, cause a run on the bank for them? They've enjoyed, at least on paper, 25% margins. Cars, for the most part, depending on which car company, 6 to 9% margin on average. But if you think that's scary, we'll come back in a minute and talk about his SpaceX engines and something else, which is kind of scary if you know the history behind it. We'll be back in a minute.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And yes, I think Christmas came early on Friday to traders that were thinking about shorting. We shall see. In the meantime, we're back to the market, already in progress, 2159 on the S&P cash, which is off about 9 points. Volume's a little tepid out here. I'm not expecting a lot of volume for probably a couple of days. Remember, this is October, and one of the things that's going to happen in October is we don't have expiration until the 21st. This is a long month for options. You get one extra week at, actually about 4 days, the way that everything fell. I've said that I thought SpaceX was probably the best business that Musk had started. I'm going to rescind that. The reason why is he was out bloviating yet again, stating how he was going to send everybody to Mars in 2024, which I thought was rather interesting, mostly because a study is finally done with the only gentleman to have left our planet and low Earth orbit and actually left the bonds of Earth, gone to the moon. 8 of the 11, I think that's the right number, 8 of the 11 died from heart conditions caused by radiation exposure. And that was them just being gone for about 7 days outside the magnetic field of the actual Earth. And in fact, NASA has quietly came out last week and said that they're pretty sure that any humans that went in an unshielded spacecraft would die probably before they made it to Mars of heart failure. Apparently, it does very tough stuff. So one of the things that Musk is thinking is that he's going to make this gigantic rocket booster to get something heavy enough with enough shielding in it to take off. All I could think about, and most people probably didn't spend a lot of time thinking about it, but I did spend a little bit time researching and reading about the Russian Soviet space rockets. They had a thing called an N-1 rocket, and this is the reason why they never made it to the moon. We had the Saturn V, which had 5 engines on it. The idea was that that was about as many as they thought that they could put on, because the failure rate is going to be the same for each engine for the most part. And these things, in fact, if you've never been down to the Space Center on the West Coast, you should go. One of the things that most people don't tell you is that they have a jet engine in the base of that that's as powerful as the F-16 engine, which, in fact, it's very close to looking exactly like an F-16 engine. The one thing that this engine does is pump fuel into all those gigantic engines. Well, the Russians tried this. We're going to just use as many engines as it takes. We'll build a bunch of smaller ones, and then if one fails, it's no big deal. What they forgot to really think about, and what Musk, I think, has forgot about after all these years, is that these things are spinning at 20,000 RPM. When you use a fan blade or a turbine blade on these things, they launch like little missiles, and then, of course, rupture the engine next to them, which, of course, makes them blow up and rupture the engine next to it. And that's pretty much what happened on I think it was 6, maybe even 7 launches of the Russian rocket trying to take off, and why they never made it to the moon. If they would have used a design that was closer to the Saturn V, they probably would have been on the moon maybe a year and a half after us. They could never get the thing to launch. I think the longest one that it spent in the air was 45 seconds before it blew up. Most of them actually made 20 seconds and then impaled itself back into the ground not longer after that. But, there's more of my engineering background here that I just saw this. I wanted to talk about it. But if there's a number of failures on an engine, let's say a percentage of failures, and one engine has a failure rate, and you put 2 engines next to it, guess what happens? The failure rate doesn't double. It actually is 4 times. It's logarithmic. So each time they put one of these engines on, the failure rate's going to be higher. If these things are using any kind of turbine to push fuel into the rocket engines, any one of those that busted and would fly apart at 20,000 RPM would probably take out another 6 engines, which would take out the rest of the engines. It was a dumb idea. The Russians never made it off the ground. I suspect if Musk goes down this path, I would not suspect a different outcome. To this point, SpaceX has used pretty much proven designs. They've just tried to use newer techniques to lower weight and increase the ability for these things to launch. But this sounds to me like a road to doom. What else do we have going on out here? Netflix actually popped today, which I kind of almost super unintuitive for me. They've spent a huge amount of money, which they will not say, on the Woody Allen series. But someone asked me why I wouldn't play content companies and or what I thought about Netflix. And the answer is, throughout history, movie studios, anybody that's content creators, have always had an incredibly low multiple for the stock, because almost all of them run into big, long periods where they can't crank out anything that's decent. Everything ends up turning out a dud of a movie. And I don't know how this is going to cost them. Netflix popped real good today, but almost every stock that was heavily shorted on Friday, I think they just popped it as of a standard operating procedure. But we'll continue to keep an eye on it. But just remember that long term, I'm not very positive on Netflix, and there is that one reason. The CEO actually came out on Friday and said that he wanted to be somewhere in the area of 50% content for everything that he has on Netflix. I actually canceled my Netflix subscription last month, and maybe after about 3 or 4 months, maybe they have some new stuff on it I want to watch. But in the meantime, I went through about 2 months where there was nothing, maybe one movie I wanted to watch on Netflix. So I just canceled it for a few months. Maybe they'll have enough new stuff in the near future that I'll have something I want to watch. But not now, and apparently who knows how much money they threw at Woody Allen to make something that is pretty poor. Going on with Twitter, it has a pop today. It's up 4% too. A lot of people are, jumping all over this. I'm unsure why they are. I don't see anything that changed in its ability to make money. It's also the running butt of the joke on South Park this year. And we'll talk more about this when we come back. But I'm trying to figure out how they think they're actually making any money. I still haven't figured out, just because they've got their tweeting the NFL games, how that's supposed to actually make them any money either. I don't know. Sounds to me like a lot of selling the sizzle and not the steak. We'll be back in a minute.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
The events surrounding his quitting Twitter were very suspicious. Most people that quit Twitter leave at least 3 paragraphs stating that they're quitting Twitter before they quit Twitter. This child just stopped using it. We're simply trying to gather information on whether this was a Twitter suicide or Twitter homicide.
Anyway, South Park kind of going after the whole Twitter blowhardy people coming and going on. And, of course, Mark Andreessen, the big investor and one of the starters of Netscape, it was been blowing all last week, which is one of the reasons why South Park has taken aim at the Twitter. But I don't know. It still seems to me like everybody says it's a great idea. There's no way that they can figure out how to make money. And the only people that are really big on Twitter are the people that are saying they're leaving Twitter. So I don't know. The whole idea of someone buying this thing out, why couldn't you just duplicate exactly what Twitter was and not spend all those billions? It's the same thing I recommended to Microsoft. They didn't listen to me when they built Skype. $8 billion, they could have made it for $500 million and given me the $7.5 billion, but they didn't. But what can I say? Not everybody listens to me. What's going on out here? Statistics. Statistics and applied probabilistic knowledge is the core of knowledge. Statistics tells us if something is true, false, or merely anecdotal. It is the logic of science. This thing was one paragraph out of Fooled by Randomness that kind of hit me like a sledgehammer in my forehead in about 2003. I decided that I was going to try to at least to change my trading into something that was much better, mostly because I didn't know what was working and what didn't work. We work in a market that is not random, but pseudo-random. I had to change if I was going to be a long-term investor / trader, and I did. Part of that was learning statistics. And one of the things I can say is that I had somebody ask me why I won't talk much about the Dow or the NASDAQ. And I will show you just very quickly. There's a margin of error calculator on SurveyMonkey. If you want the link, just email me at path@tfnn.com. But let's say, and I'll do it right here on the on air. Let's say that there are 5,000 stocks that trade more than 300,000 shares a day. So theoretically, these things should be tradable. It's pretty much what I do in my scans every single night. If I wanted to know that I was about 95% right on the market on a confidence level, just what would my sample size be? Well, if you come out to find out that if my sample size was 350 and I calculate it, I would be plus or minus 6%. Probably not too good. What if I had 500 shares, 500 stocks? Well, my margin of error gets down to 5%. So if I'm looking at a index of any kind, what happens if I looked at 30 stocks, i.e. the Dow, and tried to interpolate that into any meaningful movement? My margin of error would be about 18%. So there's, I don't know how anybody in the world could think about trading plus or minus 18% on their margin of error and just being, that would get you right 95% of the time, but you would be off anywhere 18% on either side. I don't know how you could ever make a living doing that. Let's say that we looked at something a little bit better like the IWM, where we have 2,000 stocks. That would give us a margin of error of about 2%. So I'm not a big fan at looking at any kind of index that is extremely weighted or that has like the NASDAQ, where the top 6 stocks are over 52% of the entire index. So you've got 94 stocks that make up the other 48%. But if you've ever wondered why maybe something isn't working as well as possible, I would recommend at least looking at some statistics. I wrote kind of a big piece this morning about stinking thinking, and that was taking anecdotal evidence and turning it into something that it is not, which is fact or something you could even depend upon for the markets. And I've heard numerous election cycle theory. I called and got a hold of the chair and the professor for statistics for the entire Florida college professors. He's the kind of the king of everything in Tallahassee. His name's New Fong New. And talked to him about my problem, which is just on the surface, I thought all the discussions about the market going up or down because of any particular poll or because a particular candidate was going out there. And almost magically, I'm talking to him on the phone this morning, and I see the gentleman that's been mostly pushing this. His name's Tom McClellan. He's the son of the people that actually invented the McClellan oscillator, which I used for a number of years. Still a great signal out there. I made my own version of it, which is much better, in my opinion. Anyway, I was talking to him for a while. I shot him an email with the theory that Tom had been pushing out there. And my one question was to him, how many election cycles would you have to have the data for to actually even get to the point where you could even claim that there was any kind of causal or a correlation? And we went through it for a little while. It took about 10 minutes. He just happened, I emailed him and he called me back. He happened to be in a room with 4 or 5 other statisticians at the time. They thought it was a very interesting problem. You know, how many election cycles would you really want to do? They were all, I could hear them in the background scribbling in the notes and the things, and they didn't, they didn't have to spend a week on it. But the genesis, or not the genesis, the distilled end of it would be that if you had all the data throughout the entire election, you would need 20 election cycles to even get started of having a chance of proving any correlation, much less causation between the two. So when I heard Mr. McClellan say that he had all of 3 or 4 election cycles, I think he said he had 4 election cycles, I knew statistically it was hogwash, toilet paper. It is, you got to look at a lot more than anecdotal information before you can put it into practice, at least in my opinion. And I wrote a little bit more about the fallacies that go in and why we can make such horrible decisions or even listen to things that maybe are just out and out noise. We talked about the signal and the noise, and my favorite book, the Super Forecasting. Good reads, but I refuse to listen to noise, and all these so-called half-baked ideas don't even get close to even the basic benchmark.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
If you're looking to discover a new financial resource and diversify your financial portfolio, consider the new Market Safe Focus Commodity CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 6 equally weighted commodities, including gold, silver, copper, nickel, soybeans, and sugar, in one powerful CD. With annual pricing caps of 50% per component, you could earn up to a 50% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The October 13th funding deadline will be here before you know it. So hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Anyway, as Mark Twain said, there's lies, damn lies, and statistics. You need to be extremely careful when someone gives you something like this and you act upon it. It may be interesting, but at this point, there's nothing to make me believe that the AFC or NFC football games have anything more to do with the stock market than polls. And we covered this last week, that the numbers in the polls haven't changed that much. What has changed is the guess from pollsters on how many on each side of the aisle will show up. They have no real information on that. And probably the most interesting thing I saw over the weekend was the election in Colombia. The communists have been up in the hills forever. They're known as the FARC, F-A-R-C. And these are some horrible killers. They're the worst kind of people in the world. They really got started because of that miserable SOB Castro down in Cuba. Anyway, they've been running around killing entire villages, raping, killing, murdering for 50 years. They want to come out of the hills, and they held a little election whether or not to give them immunity. And everybody said that it was going to be, it was 2-1. What's calling into this war? Well, it didn't quite happen. 51% said, no, leave them in the hills. Let them die up there. We do not care. These polls have a lot more to do with forming opinion than the actual reflection of any opinion. We've seen that, of course, in the British exit vote. I suspect that we will see it here in the U.S. vote in the coming months. Statistics can be used for evil, and we see them used every day for it. But I don't know. Everybody, 66% of the people were supposed to vote down there in Colombia for giving these guys a pass on the stuff that they probably all should be hung for. And didn't happen that way. That's why they run races. They just don't take a poll before the race on NASCAR. They actually make them run the race. A lot of different things can happen before the end of it. After the bell tonight, we've got the Container Store and Yum Brands. Of course, we had Tesla this morning. It's up just about 5%. As we check back into the market, 2158 on the S&P cash. Not a lot of juice so far. But this market pretty much is working exactly as you would think if you had all the data. That is that every time someone shorts, they move the market up. It gets to the highs, the shorts cover, it's up there for the briefest of time. And then with no shorts to cover, the market kind of falls like a souffle, which is kind of interesting because guess what? I'm a product of the 60s and 70s television show. Remember, every sitcom had the mother that was making a souffle in the oven and no one was supposed to slam a door or anything? I'm glad they wore that out. I haven't seen it in 20 or 30 years. Maybe it's finally gone away, but my mother never made a souffle. Anyway, it is a mad market. So let's start looking at some of these stocks that are moving out here today. We will look at a longer term. You can give me a call at 877-927-6648. You can email me at path@tfnn.com. And, of course, you can opine in the den itself, and I'll try to remember what we have going on here. Question in the den is, why is the big push on Mars? Because it has nothing to do it has nothing to do with going to Mars. It has all to do with free public relations. In 10 years, no one's going to remember that Musk or Bezos or all these other guys were yelling and screaming about going to Mars. But today they get free PR, and they all look like heroes. It's like the people that have these bumper stickers on the car, "Stop human trafficking." Well, I'm wondering how many human traffickers just saw that bumper sticker and threw their hands up and said, "Enough for me, I'm quitting." It doesn't take a real hero to do that kind of stuff. It takes a real hero to go down there and put guns in the faces of people that are human traffickers. So, and that's pretty much the only thing that's going to stop them. It's like pedophiles. You're not going to stop them with nice, warm feelings and pictures of clowns. It is some things actually take real effort to solve. But, you know, the press always looking for the easiest story in the world. And this is one that doesn't take any research. They don't have to get an opposing opinion. It makes people look like gods. And, of course, eventually the newspapers will turn on these folks at the first opportunity. But in the meantime, it's an easy column. People read it and they feel happy. Probably unlike a lot of the stuff that I have to talk about, because reality is a problem for me. I don't like people telling me one thing and doing another. Cabot, CBT. Kind of an interesting pattern up here on light volume. These guys if I remember right, make a lot of cranes and industrial equipment. Again, we were talking about these patterns on Friday. So this is a little continuation on that. And that is that you had some nice ABCs. The thing is, the C to D legs have been coming off in energy. In the case, the August 3rd low in this up until the September 29th high was about 30% lighter than the June 27th to the July 28th high. Of course, it did test that high with about 1/4 the volume and has pulled back into the trading range. These things do not look like they're really running. Other stocks of interest out here, ConocoPhillips, on the event that this is a retrace of the moves back here. It kind of looks like we're into these huge volume day down and big gaps down in ConocoPhillips. In this one, really the gap started on the 24th of June. This came down with 13.6 million shares. You did spike that with 16.5 million shares, but that's about it. You've got a lot of gaps in these things. I think the easy road of the couple of days that followed what I think is probably more bogus news in Iran and Saudi Arabia getting together and singing Kumbaya on oil prices. I don't think that's going to go very far. I'm figuring maybe a week, maybe 10 days before the wheels fall off that big wagon of everybody giving a group hug over there in the, as our soldiers called it, the sandbox. But, you know, you've got these gaps. You kind of came up to them. The energy was not all that bad in ConocoPhillips. It's hard for me to see that these things, if you were in ConocoPhillips, kind of makes me look at worst, this is a trading range. At best, you are in the part where it's going to be very hard sledding for more money. We'll be back after this short break. We'll go through some more stocks. Email me at path@tfnn.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
Well, we got Tom O'Brien warming up in the bullpen, getting ready to take us home into the 5 o'clock hour. 2158 on the S&P cash. Looks to me like we're going to go back and say hello to our little friends. Those are those stocks that traded at 2154.77 on the S&P cash today. Again, volume fairly light, but my guess is that if we're setting the hook for lighter, for a volume down, it does not many times come with energy for a while. You've got to have a lot of non-believers, or everybody piles on short and they squeeze the market again. So we'll keep an eye on it. You want to see a couple, 3 or 4 days with light volume down, and then the volume pick up along with an acceleration in the move down. That is the difference between short-term highs and long-term highs. So we'll find out a little bit more, but it may take the rest of the week. as we said at the beginning of the show, this is a long month for expiration. The 21st is the day. So if you want to buy options, you got some time, even in the October monthlies, which is not a bad deal out here. The idea that this market could go down, if you look at the VIX, continues to show nobody believes it can. And guess what? That's when you want to be the most vigilant, because it's probably the most likely time that it will. Conchito Resources, CXO. We want to see this August 15th high tested. Well, we got it tested out here. $137.40 with 1 million shares. 1.7 million shares, but did not break the high. We did break the high today with 1 million shares. So some of these material stocks looking a little bit better than the rest. Brinkers, EAT, a few stocks out here starting to make some bottoms, but certainly they're not what everybody's been piling into for the last 6 weeks, which is, of course, the semiconductors and some of the other stocks out here, which are kind of hanging back now. Very crowded trades in technology and semiconductors. So watch out for that. But some of these stocks don't look all that bad, but they aren't the traditional stocks that anybody's talking about. Brinker International, EAT, had a sign of strength on the 11th of August. Did exactly what it's supposed to do, 6.9 million shares, nice big candle, everything you want, went higher, and guess what? It's pulled back with light volume. You had a little bit of volume back here on the 27th, but not so bad. There is a gap of a gap right at 49 bucks. If you are hell-bent on going long this market, this is one of the stocks that if you continue with light volume down, test $49, you might have some decent risk reward in it. EOG Resources, another one at these highs, but again, tiny little bit lighter volume. We'll see how this does over the next couple of days. The one downside in stocks that are in the $90 range is that they have a bad tendency to go to 100. Whether economics defines it or not, probably the reason why everything is 99 cents and gas ends in 9/10 of a cent and all the other. But keep an eye on this. The September 8th high, $95.93, went to $97.20 on Friday, did so on much lighter volume today, just 1.6 million shares. Like I said, I'm not a big fan of shorting stocks that are in the $90 range. I'd rather short an $85 stock or a $105 stock, just because they have a tendency to go to 100 no matter what. About 80% of the time. Pretty high. We will see you tomorrow. Same bat channel, same bat time. Remember to sell when you can, not when you have to.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.